This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Hands up. Who did the question? Few. Not everyone. Yeah, just try and work the question if you can. I do think it does help with your learning, which is really, really, really important. You've got to get out of this habit of having the exam or the answers to hand or having someone talk you through an answer, because when it comes to real exam, you've got to adapt to the situation whereby there is no, if you like, answer there for you. Okay. So, should we have a look through it? Yeah, let's go. Excellent. So, what have we got? Read the requirement first as always. So, we're looking there at your statement of profit or loss and your statement of financial position. And here the year ended is the 31st of December 20x5. So what do we have? Noah has a 3-year contract which commenced on the 1st of January x5. So that's the very start of the year. It's been running for 12 months. We're 1 year in out of the 3. So there is 2 years left. What are we told? We've got the following balances from its ledger relating to the contract. So again, you've got your total contract value. So again, that is the total contract revenue, isn't it? We've then got the costs up to our reporting date. So there's a bit of a curveball in here. Attributable to the work completed, which is 52. We've then got this inventory purchase for use in future years. So they're all costs that have been incurred this year. Some relate to this year, some relate to future periods. So we might have to just play around with that a little bit later on. You've got the progress billings to date. So that's the amount effectively that are your receivables. That's the amount that you've invoiced your customer in the year. And then you've got the cash received, which effectively is going to reduce the receivable balance by, is it there, the 26,500. You're told that we've got cost of completion of 48,000, and at the reporting date of December x5, it's work certified as 40% complete. So effectively looking at the output method, but it doesn't really matter because we're told that it's 40%, and that's what we will use if it is a profitable contract to apply to the profits and therefore to the revenue as well. Okay, excellent. Let's rock and roll. So remember, you've got your 4 steps. So step 1 is to work out the total profit or the total loss. So what you've got there, we need to look at the total revenue, which in this instance was the 140,000, and then we need to deduct the total costs. So what we've seen previously is that we've seen our total costs to date and our total costs to complete. So our costs to date are there at 52,000. So effectively, that is what's been attributable to the work completed. They are the costs that we've incurred this year that relate to this year. You've then got your cost to complete. So the cost to complete are 48,000. So again, that's the 48,000 there. But just be careful with this 8,000. Do not ignore that 8,000. Although it's not a cost to date because it doesn't relate to this period, it is a cost that is going to be incurred in constructing this asset. We just bought a load of inventory, presumably because it was cheaper to buy now than hang on and wait until the future. So therefore it's going to form part of the costs, the overall costs of the contract. That's what we're looking at, aren't we? Total costs. So what we have now is that we can work out is that on this contract, we are going to make an overall profit of 32,000. What we need to do now is we need to spread that 32,000 over time, and here we're using the output method based upon, what was it, 40% complete. So again, just for habit, if you like, we have our stage of completion. Our stage of completion is at 40%, isn't it? So if that's the case, we're going to recognize 40% of our total profits, which is at 12,800, isn't it? That is the total profits of 32, and we're 40% complete, so therefore it seems reasonable to recognize 40% of that profit. We then go through and look at step 3. Step 3 is on the statement of profit or loss. So here what we've got is our revenue, costs, and profits. We've just worked out in that second step that the profit that we recognize is 12,800. The revenue is based upon that 40% complete. So 40% of 140,000, does that give me 56,000? And therefore my cost figure as a balancing figure should be 43,200, isn't it? There we go. Excellent. So those are the figures that would appear within your statement of profit or loss. Everybody happy with that? Yeah, excellent. Step 4 is then what we look at on the statement of financial position. So what you've got effectively on the SFP is that there's two things to look at. First of all, you're going to look at your contract asset using that pro forma from earlier, but, and this is where students go wrong within an exam, where they lose the easy marks, you also need to look at your receivable. Your receivable given within the question, if we go back to where the question was, we're told the receivable is 45,000. We're told that the cash received to date is 26,500. So we would have the 45,000 less 26,500. Does that work out as 18,500? That is the receivable that would sit there on the statement of financial position. One number less the other number, that's it. You could even have done that right at the very start of a question if it was published company account. Don't lose out on the easy marks. Simple. The rest of it's a challenge. That's easy. The contract asset, how do we go through and work that out? So your contract asset, let's just move that down because we need to do a bit of a calculation, don't we? We need to work out your costs to date. We then add on your profits because it was a profitable contract. We then deduct the receivable. I suppose that's not technically correct because the receivable balance is 18,500. The figure that we're going to deduct is the amount that's been invoiced. The amount that's invoiced is there at 45,000. So throw that in, shall we? Invoiced is 45,000. Our own figure for the profits is 12,800. So the OF for own figure. Again, easy marks within the exam. You've got to just be careful with the cost to date on this question, because when we're looking at the costs, you could quite easily go through there and take the 60,000, because yes, we've incurred those costs, but they don't relate to this period. It's just inventory that we've bought that relates to a future period, doesn't it? So we can't recognize that as a cost at this point in time. So what we're recognizing there is that the costs to date are at 52,000. If we go through that, total that up, that should give you there, is it 19,800 as a contract asset that sits on the statement of financial position. There we go. So whichever question bank, textbook that you're using, Kaplan, BPP, there are others out there as well. Feel free to go through and have a play around with the questions that are there. They are effectively the fundamentals of looking at performance obligations that are satisfied over time. If you have any questions, fire away with them on the Ask the Tutor forum. Other than that, we'll just cover the various bits and pieces that are left within the chapter in a separate video. Take care, and I'll see you all soon. Bye.